Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with JDM. Today's outlook, we start with the Bank of Japan and its monetary policy that was maintained. Of course, the stimulus at the conclusion of its two-day meeting on Friday. The central bank kept policy steady last month, but cut its forecast for economic growth and inflation in its outlook statement. In an 8-to-1 vote, the central bank pledged to increase base monetary policy with an annual pace of 80 trillion yen, that's approximately $660 billion throughout the purchase of government bonds and risky assets. Meanwhile, the Nikkei 225 index made muted moves and remained in the negative territory following the Bank of Japan's decision. However, we're looking at the yen, it strengthened slightly, a touch, to trade at 120.81 against the US dollar compared to the 120.9 prior to the news release. Shanghai shares hit fresh 7-year high in early trade, outperforming the region that traded broadly mixed on the final trading day of the week. China's benchmark Shanghai Composite Index charged up 1.1% to hit its highest level since February 2008, with financials taking the lead. Australia's S&P 200 index pulled back into neutral territory as banking, stocks and some miners turned negative. The financial sector came under selling pressure with Commonwealth, that's also Bank of Australia and other group banking sectors in the region, with losses down nearly 1% each. European equities are expected to open higher on Friday following the lead set by their Asian and U.S. counterparts. And of course, as investors gear up for the speech from U.S. Federal Reserve Chair Janet Yellen, markets are looking ahead to that speech later today throughout the U.S. session from the U.S. Central Bank Chair Janet Yellen for new clues on when it could hike interest rates. Gold on the commodity sector held steady just above the 1,211 an ounce on Friday, remaining on course for its steepest weekly decline in 4 weeks as the dollar regained momentum, hurting the metal's safe haven appeal. Gold was little changed at $1,207 an ounce this morning after dropping 0.3% in the previous session. The metal is down 1.4% for the week, its biggest drop since the week ended April 24. Bullion was also failed to react much on the Fed's minutes release this week, as that view was already widely held in the market following disappointing U.S. economic data over the past few weeks. In fact, investor sentiment towards gold has turned bearish as prices have fallen from the 3-month highs reaching earlier this week. Holdings in the SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, slid to their lowest in 4 months. That was the report on Wednesday. And of course, in energy sector, oil prices edged down on Friday after rising more than 2% in the previous session, buoyed by lower U.S. crude inventories and geopolitical tensions in the Middle East. U.S. crude futures are in their longest winning streak since records began in 1983, helped by a drop in crude and product stockpiles last week, reflecting better demand in the world's biggest oil consumer. West Texas Intermediate for July delivery was at $60.61 a barrel throughout the Asian session, down from yesterday's peak at $60.85. Markets are now focused on the calendar events. Today at 8 o'clock, ECB's President Draghi will have a speech at 12:30, US CPI, and of course, Fed Chair Janet Yellen will have her speech at 17. That's all for today. Thanks for watching. Keep an eye on the calendar. Major events today. Thank you. Bye-bye.